All right, we are live. So welcome back to Dapp University. So today we got a lot to talk about in our live stream. We're talking about the next big threat for crypto. Okay, we'll look at that. Look at a lot of other news updates that have happened in the space since yesterday. Again, we do these live streams Monday through Friday in this channel. Just subscribe, turn on notifications. You're going to find out about those whenever you're live. We're going to take a quick look at the crypto markets here, answer some of your questions, and a whole lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's what you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step by step start to finish, then definitely head on over to dappuniversity.com/bootcamp. All right. All right, so we got people jumping in the chat here. We've got Kodia, Dale, technically, David, Stone, Venture Warrior, Jay Lee, Lee Robert, Matthew, Automatic Beats, Sunil, Strive. Welcome. Let's see here. All right, so yeah, we got several things I want to talk about in our stream. There's a lot of stuff happening in the space that you definitely want to be paying attention to. And I want to first bring up this article that came out. It's been published in several different places, but it's talking about some Microsoft's comments on crypto. Basically talking about blockchain domains as the next big threat. All right, the next big threat and why you might want to listen to this, okay? So let's take a look at this. So it starts off talking about Matthew Gold, the founder of Unstoppable Domains. If you're not familiar with Unstoppable Domains and what they do, basically they are a domain server, that lets people register crypto-based domains. So you might have seen like the .crypto domains floating around. Excuse me. Well, the .eth domains going around. So .eth domains, of course, are native to the Ethereum name server. Let's talk about that here in a minute. Basically talking about how crypto domains are a big trend that's continuing to take off. Okay, we've seen pretty expensive prices on things like ENS domains in the secondary market, but how this trend can actually continue to grow and get a big threat that is powered by crypto. Okay, so basically, we can see that, basically over 2.5 million registered domains have been filed with the service, okay? And the company just crossed a $1 billion valuation. If you add this to the number of .com sales of 2021, was just 126,770. And .eth name registrations were just 378,000 last month. Now, you kind of got to read that a little bit because, of course, there's fewer and fewer viable .com domains. Okay, the opportunity is a lot different. It's not like the early days where you could just register pretty much any name that you wanted to before they were quickly snatched up. Okay, but basically, we had that's sort of what's happening in the blockchain domain space. I'll talk a little bit more about why it's important in a minute, but we've had some comments come out from Microsoft from the Digital Defense Report, actually talking about cybersecurity, talking about blockchain domains being an emerging threat outside of regulation. Okay, basically saying that the threat actors on the internet that have started utilizing blockchain domains as part of their cyber criminal infrastructure and operations, which basically it's a common complaint that's aimed at pretty much everything in crypto. This has been sort of like why crypto has been in the crosshairs in the first place. I think cryptocurrencies, because they are used by criminals, okay, are bad. All right, I mean, you could definitely apply that argument to green cash if you want to. There's not always something that holds water, but now we're seeing this sort of in the crosshairs for blockchain-based domains, and why they're bad as well, because people who do bad things also use blockchain domains. It's kind of a head scratcher in my opinion. So, anyway, so whether it's true or not that decentralized finance facilitates fraud or malware more than traditional finance does, that's always the kicker. Is if it does it do it more than the existing system? It's also hard to tell. Basically, they're still saying that blockchains work differently from traditional domain names purchased through internet registrars operating through the ICANN regulated DNS system, and pose challenges both for utilization and disruption standpoint. Okay, so the real thing to understand is that is a feature. It's not a bug. Okay. So a lot of things that people criticize about crypto and how it works, blockchain technologies, particularly as it registers with blockchain-based domain names, is that a lot of the complaints about they see the side effects, it's because of the features of the actual technology, not because there's some sort of bug associated with it. Now, the features of the technology can be used, for nefarious purposes, just like many other things also can, like we're talking about green cash here. But let's talk about some benefits of decentralized domains and how this can actually be a huge, as they call it, a threat for lots of other things. It can also be a disrupting threat for how technology works now, but can also ultimately be a good thing that brings competition into the marketplace and provides benefits to end users that they can't get somewhere else. That's the whole idea with blockchain, is that you want it to be something that is a disruptor. So at one level, a threat is a good thing. Now, we don't want threat to people's safety or people's, own finances or their own security, right? But bringing competitive options to the marketplace is a good thing, and that's a threat in a positive light. So what could that look like? Well, basically, I don't know if you've ever had to register a domain name before, like through GoDaddy or Namecheap or Google Domains. They're talking about basically having a regulator in place is, a good thing, blah, 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 blah. But there's also this crazy amount of fat that goes around all that process, okay? I don't know if you ever had to, do DNS settings. And they always tell you it's going to take like X amount of time for DNS to populate. Well, it's like that really shouldn't happen. Like DNS should pretty much resolve instantly. That's one problem in the first place. The other thing is, I don't know if you ever had to buy a domain name that's already been registered or it's been parked somewhere, and then you have to wait for that to actually get credited to your account. I went through a pretty bad experience one time where I had to buy a domain name for a project, and it was, we were kind of under a tight deadline, okay? And we actually purchased a domain name for a project. We literally decided and registered a legal entity because we were able to purchase the domain name for it. Like, we sort of had different, choice, like, hey, we're going to either name it this or we're going to name it this. And it depends on what domain is available. Okay. And so we purchased the domain that we liked available and then went through the legal process of registering the entity. Okay. And we purchased it. It was basically through a middleman where essentially someone else had already purchased it, but they listed it on a different domain website. Okay. And then that domain website that you, person on was not upfront about that. And so after you go through the checkout thing, they're like, okay, yeah, it's going to be like 30 days before we're able to actually transfer the domain name to you. Which, number one, that's a huge, we didn't have that amount of time to wait. And so we had to change our plans to accommodate that. And then by the time we got to the end of those 30 days, like a week before, they're like, well, actually this fell through and it wasn't actually for sale. So we went through the entire process of naming a company, going through legal filings to create that entity because that domain name was available and we already had a receipt of purchase that was supposed to go to us. And that's a horror of centralization and centralized services and how they can completely screw you over, okay? So, with blockchain technology, that should be 100% automated. The fact that the domain names even for sale should be verifiable on chain. Whenever you go through a purchase, it should be instantly transferred to your ownership or within a matter of seconds, depending on how long it takes the block to be mined or included in the blockchain, whatever the consensus model is, right? So that is a feature, not a bug. All that stuff is very good, okay? And so you're talking about the ability to create, censorship-resistant domains and to continue to decentralize the stack. That's another huge part of this, because we're seeing censorship come up in the conversation a lot right now with, especially with what's going on with Toronto Cash, the U.S. sanctions, all that type of stuff. Okay, so, there's different ways to create censorship-resistant applications. You have 3 layers. You have the blockchain side, which are the smart contracts, okay, that power the application. Then if you have a user interface, okay, that's going to be hosted somewhere. So, right now you can do that on a centralized hosting service like, Heroku or something, or AWS. Is create a website and put it on the internet, and then that could talk to the blockchain, but that's still a centralized point of failure, right? So let's say you move that over to IPFS, okay? So you use the interplanetary file system to host your website assets. So then you have a decentralized website, then that can talk to the blockchain, which is a decentralized smart contracts part of the backend. But what about domains, right? Of course, you could pass on the IPFS URL, or you could get, a centralized domain name that resolves to an IPFS hash. But that's still a problem. There's a centralization at that level too. But with blockchain-based domains, we can continue to decentralize the stack and cut out middlemen and put, at the DNS layer, actually create something that can resolve to, those assets as well, so we can have a fully decentralized website and then continue to make that Web 3.0 experience that users ultimately want and can bring the full-on benefits of Web 3.0. And that's one way that this is a good threat, in my opinion, okay, for crypto moving forward. It's a value proposition of Web 3.0. Of course, it can be used for bad purposes, just like lots of other technology, lots of other things that we create. But in many cases, when we're talking about we're talking about regulations against things that can be used for bad purposes. Typically, the only things that get regulated are the ones that don't have strong incentives for the people regulating to use. Okay, so I mean, there's lots of things that there's lots of shady activity that happens. I'll put it that way. Around things that normal people use every single day, but people who are responsible for regulating those things oftentimes would be cutting off their nose to spite their face to impose regulations upon those things, because they would cut them off from opportunities that they often take advantage of. So that's definitely, or there's incentives, bigger upside potential to put the regulations on them for them as an alternative. So we'll see what happens with domains. This could be an area where we start to see some sort of regulatory crackdown, but I think it's way less of a priority than regulating things that could be potentially securities or used for, really bad, exploits or something like that. So speaking of what's going on with Web 3.0 and the adoption in the space, I wanted to bring this up. This is something that popped up today. So we see this literally just came out. Okay, so I just saw this this morning. So Ticketmaster taps Flow blockchain to let organizers issue NFTs tied to tickets. Okay, so NFTs really exploded onto the scene in a big way last year during 2021. Okay, during the bull market. NFTs have been around for a while. I mean, I put out. We had NFTs during 2017, 2018. Okay. 2018 is really when CryptoKitties kind of exploded and clogged the blockchain. Into 2017, beginning of 2018. That was in the last major bull run before this one we just saw, in case you're new to the space and not familiar with what those timelines look like. Just like everything else, the space kind of got quiet. People weren't talking about NFTs quite as much as they were last year. I even did a bunch of, tutorials on how to create NFTs and how to do crypto collectibles. And you can go see those on my YouTube page from probably 2018, 2019. But anyways, NFTs really made showed up in a big way last year. I have more people outside of the crypto space ask me about NFTs than they did about cryptocurrencies last year. That's how big they got. We were talking about seeing NFTs on major meme accounts and stuff like that on Instagram and others. Okay. So anyways, the market for NFTs has really changed. And, I've always been super excited about what you can do with NFTs outside of digital collectibles. Of course, I think crypto collectibles are cool, right? Digital artwork's cool, but there's still a good amount of speculation around that particular space. And, I'm just more bullish long-term on the wide viability of other NFT use cases, like intellectual property, like ticketing. And we're seeing a move forward in that with Ticketmaster. So basically, Ticketmaster will now let organizers issue NFTs tied to tickets on Flow. So this is basically if you're not familiar with Flow blockchain, it's made by Dapp Labs. Okay, so the Live Nation subsidiary said that event organizers can make these NFTs available before, during, or after the event, and even enable special experiences like loyalty rewards or celebrity meet and greets, or simply offer memorabilia in an NFT format. Okay. So Ticketmaster, they initially partnered with Polygon last November, okay, for NFL fans, okay? And then we're seeing this step up again, okay, with 70,000 Super Bowl tickets, okay? And now we're seeing more NFTs issued on Flow. So this is definitely an interesting step in the right direction, okay, for what these companies are doing. I know there's a lot of mixed opinions about Ticketmaster, okay, lots of people who are don't like Ticketmaster that much and think of them as maybe the antithesis of crypto. But I put it this way, people who are in the centralized space right now, for anything that crypto could potentially disrupt, are the smart ones are paying attention. And I'll put it this way: whether you like Ticketmaster or not, they are not dumb by any stretch of the imagination. Okay, say a similar type of thing with like Facebook, right? There's a lot of people who do not like Facebook or Meta, and but guess what Facebook and Meta are doing? They're trying to colonize the metaverse before everybody else. All right. So they know what's up. They know they're smart. They know what they're doing. And this is a similar type of thing, which is an indication that we're headed in the right direction for what this technology can do. Now, at the end of the day, this is not like just full on issuing tickets on a blockchain. This is NFTs tied to tickets. But I do think that's where we can head, because there can be a better experience and programmability for users at the end of the day. Somebody says, am I going to do a live merge stream? Maybe. We'd have to really track the total terminal difficulty and see when it's going to go through. So we can talk about that. We've got the Ethereum merge coming up pretty soon. All right. If the merge actually happens on September 15th, okay, that's 15 days away. That's a huge deal. That's basically just a half a month, or just about 2 weeks away. Again, the Ethereum merge is coming up. This is Ethereum switching to proof of stake. It's the biggest event ever in Ethereum's history, aside from its initial launch, and one of the biggest events in all of crypto's history, okay, of course, because Ethereum's going to change. We're going to move from proof of work to proof of stake. We're not going to have miners. We're going to have validators. ETH is likely going to become deflationary over long periods of time, assuming that the transaction volume is about the same as it has been on a much longer time frame, like an annualized basis. Okay, not necessarily day to day, block by block, or week by week, but on an annualized basis, most likely. Okay, and especially continuing into multiple years into the future. So that's huge. Of course, we're still burning ETH whenever transactions are created, which is what has a big part of the deflationary pressure. Also because we're going to be issuing less ETH per block. The amount of ETH that's created by the blockchain is going to get cut in half 3 times, hence the triple halving, which is a net reduction of about 90-ish%. Okay. So anyways, that's coming up very soon. The merge is programmed based on the total terminal difficulty, which is the difficulty the amount of difficulty it is to create blocks on the blockchain, okay, right now under mining, and that's going to go to a certain point and cross a threshold, and once it crosses that threshold, it will the switch will flip on for proof of stake, okay. So that's going to be in a range. We don't exactly know when that total terminal difficulty is going to get hit. It could be as soon as September 10th or as late as September 20th. But right now, the current estimates are still, last time I checked, for September 15th. Let me just see here. There was a... I think it was, let me see if I can find the calculator. Yeah, here it is. All right, so here's the calculator. I'll put this in the live chat, so y'all can continue to watch this. So right now, this shows you all the different factors that affect the total terminal difficulty. Like the hash rate. Okay. That's awesome. Anyways, the price of Ether affects this as well. So right now, the total terminal difficulty is programmed for this. This value is not going to change. Okay. This is hard coded into the upgrade itself. It is expected still on Thursday, September 15th. Okay. So between the 14th and the 15th, all right. So this is the current hash rate, 892.4 terahash per second. To achieve this, about 862.5 terahash per second is the network needed as of now. So we update this every couple hours. Here's the last update, and right now you can kind of see this tight range where it deviates about where they think it is, but we still think we're on track for September 15th. Says Ethermine says 13 days and 23 hours until merge. Does Ethermine have a countdown published? Merge sounds like an old lady's name. Oh, okay. So the Ethermine dashboard for mining says that it's going to be on that date. So I'm interested to see how they're coming up with that number. That also could just be sort of a safety thing. Like they could be sort of like, I don't know. I don't know what it could be like. If you're trying to mine after this, you might be just like burning energy costs, or they also could be trying to mine all the ether they can on the last couple days and then cut everybody else off. So I also want to bring up something else here that's pretty significant. We're always talking about developer opportunities in the space and how can you get involved, or how can you build something that actually has meaningful impact or just opportunities. Okay. So we're talking about social media with Web 3.0, and here, Sani, the creator of Aave, but also Lens, okay, is talking about if you're interested in building Web3 social and Lens protocol, so hit me up. He has a bag of ideas and needs passionate developers and designers to come build them out, okay? So here we're just talking about free ideas from somebody who is very capable of funding these projects to bring them to life, okay? So Lens is a pretty cool project. We've talked about it several times on this channel. We've shown kind of demonstrations of what you can do with Lens, all right? So this is a good opportunity for developers. If you're looking for something to build that actually has impact or can have some funding behind it, okay? So, Lens is a permissionless, composable, decentralized social graph that makes building Web3 platform social media easy, okay? So basically what it does is it's a social media protocol which you can build other social media applications on top of. So what are the benefits of creating a Web3 social media app like this? Well, one is that censorship resistance, like I was talking about before. If you had any type of posts on chain itself, okay, that's you're gonna have that censorship resistance. But there's other like really interesting sort of dynamics of social media with Web 3.0, like decentralized identity. Okay, even if you're not putting all your posts on a blockchain, there's still the aspect of managing your identity on social media with a blockchain wallet, where your identity could live on chain, and then your reputation can be tied to that address, and then also whenever you use a blockchain-based application, you're a user of the network. You're not just a user of each individual application, okay? So it's not like if you go to Facebook and you create a profile, Facebook owns all your own data, then you got to go register for, a Twitter account at a completely different company, all right? And then they own all your data and your password and all that type of stuff. And if you're going to move from Twitter to Facebook, you got to start your network all over again, right? You got to find people to follow. You got to find people to follow you. And, with Web3 social media, because you're a user of the entire network, like you can just go to the app and click login, and it could potentially take your entire social graph with you. So if you already follow people on Facebook, like you could already find them on Twitter. All right, they kind of do this to some extent now with Web 2.0, but there's still like this handoff that has to happen. Like you have to let people, consent to finding your contacts, and then there's sort of like, hey, your friend Joey just joined Twitter or something, and then it'll tell you when Joey joined and then ask you if you want to consent to follow this person, etc., etc. All right, but with Web 3.0, a lot of that can get baked in, okay? So that's just one way that the user experience changes. There's lots of different interesting, novel use cases for Web 3.0 social media and benefits as well. So if that's something that you're interested in building, then definitely hit him up here. This looks like it could be a cool opportunity for somebody who's looking something to build that actually has real meaningful impact and probably has some funding behind it and some resources. ask me if I mine. I do not mine. So let's go take a look at quick look at the crypto markets here. So it says, when is the next bull run? Well, let's take a look. The next bull run is tomorrow because I said so. No, just kidding. That's definitely not a formal prediction nor financial advice. Although that would be nice to see things just flip around, turn bullish tomorrow. Hey, it could happen. Anything could happen in the crypto space. But let's take a look here. All right. So let's first of all kind of set the stage here. Let's look at sort of the macro backdrop. Let's see what's going on with the stock market. Of course, we can't really. Crypto does not really exist in isolation ever, but particularly right now, everybody's kind of facing the same headwinds. And it's been pretty ugly in stock world for the past, really month or so. Okay, kind of been this bear trend since the middle of August. Crypto's basically been highly correlated with this. So, we have to keep this in context of our broader trend. Basically, the stock market's been in a bear market for about a year. Okay, getting close. By the time we get to like November territory, if we're still kind of in no man's land, we really have been in a bear market for a year at that point. And crypto likely would be in the same position if we did that. Now, seeing lots of sentiment that stock market's oversold. But I mean, there's still a lot of looming economic factors. Like there's lots of people who are waiting for a Fed pivot. All right, for the Fed to eventually say, "Hey, we're gonna start easing." I have mixed feelings on the Fed pivot sort of thesis. Okay, because markets have a way of doing things that basically when everybody's watching out for something and waiting for something to happen to make something happen in the markets, then the markets tend to do something else than what everybody else is expecting. So I outlined a scenario previously a couple months ago on this channel. I don't know if it's going to play out or not, but there's a very possible scenario where we start to get some sort of organic recovery in stock market or crypto, one or the other or both. Okay, and then that can eventually lead the way initially. Okay, or we start to see that type of organic recovery, and then we see something like a Fed pivot actually take place. Whether it's one of those things that's not quite as announced quite as loudly as people are expecting, or maybe it is, doesn't really know, but that we've already got some momentum and that all these people on the sidelines who are waiting for the perfect entry never got the perfect entry and are forced to start chasing, and then that's what could sort of kindle the next momentum leg forward. Now, that's just a theory. All right, we don't exactly know if that's going to happen, but that is one possible situation where the markets are doing things that not everybody's expecting them to. Okay. So, in the short term, things are still looking somewhat bearish. Okay, Bitcoin has gotten back down below its 200-week moving average. This is sort of the level that it has hit pretty much in all prior bear markets. Okay, and usually once it's kind of visited these levels, we started to see things kind of correct. For now, we've seen evidence of multiple visits to this. You can kind of consider this multiple visits to it. What we ultimately want to see if we get too confident is to break above this level and hold it as support. Again, I'm not huge into technical analysis. for predicting the next, move with a high degree of accuracy. But I do like to watch the same levels that I know lots of other people are watching, because that can kind of give an indication of what everybody else is thinking. So, so that being said, it's hard to get too excited about what's going on with like Bitcoin until we get some, good news in the macro scene, and then also confirming some of that on the charts, with a stronger Bitcoin, trading back above about $24,000, and holding that level of support, and ultimately starting to watch things trend higher. So in terms of ETH, I still think we have room for the merge trade to play out in terms of people accumulating and have the merge. That being said, there's still a risk involved with the merge about what could potentially go wrong from a technical implementation standpoint. I mean, nothing's ever a certain guaranteed thing, and that risk is always something that you have to factor in when you're talking about a major technical change like this. But from a fundamental standpoint, that's what I'm definitely more excited about for Ethereum for the long term, is because the merge is actually going to affect the economics of the supply of ETH, and assuming that the demand just stays the same as it is, which I expect to grow over time, that will mathematically have an impact on the price of Ether itself. And so that's what I'm more excited about in a long-term time horizon. So. It says there would be no crypto without miners. That is true. Proof of work basically made crypto what it is today. Somebody says, I swear every network has a different type of consensus algorithm. They just make up their own thing. Well, part of that's because, that started early. That's been an early feature of crypto, because they saw the success of Bitcoin, and it was like, we can make our own cryptocurrency. Let's come up with something that sounds good and then market it to noobs. And let's make a lot of money. Now, that being said, there is room to actually make novel consensus mechanisms that are better. Okay. I think Ethereum moving to proof of stake is the right move. I don't think that's just a made up thing to make some money. Right. But there's plenty of blockchain projects out there that just make stuff up for hype. Proof of work gave value to the tech. Yeah, totally. I mean, the other thing is, like, on crypto right now, everybody's staying on the backs of giants, on the shoulders of giants. Okay. And Bitcoin is a genius invention. Like do not make no mistake. There's a lot of people who, hate on Bitcoin now because the market cap is so big and they feel like they can't make any money, or they don't really use it to make transactions. And there's other stuff now. It doesn't support really sophisticated apps, but you would have nothing else that you have now unless we had a viable Bitcoin prior to this. And there's really nothing else like it before. So it's a genius invention. All right, everybody. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That'll help these videos out so the more people can learn about blockchain. And if you're as fast at this technology as I am, you want to get your hands dirty, how can you get started today? You go to my YouTube homepage. You can find my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe take a master shortcut entirely, actually how to master blockchain step-by-step start to finish, land your first blockchain job over at dappuniversity.com/bootcamp. You have to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. And until next time, thanks for watching Dapp.